it's only the beginning of March. This new year has been so hectic that the things that happened 2 months ago already feel like they're from another era. Just think about the deal to end all deals in the big pharma space. Bristol-Myers taking over Celgene in a cash and stock transaction that was valued at $74 billion when announced on Jan 3rd. That was only 2 months ago. When we first learned about the transformative acquisition, Wall Street was highly skeptical, and Bristol-Myers plunged more than 13% single session. A lot of investors were worried that the deal was being done out of desperation on both sides. Merck's got a competitive cancer franchise to Bristol. It's done exceptionally well in head-to-head trials. Celgene faces a tough patent cliff for its crucial, lucrative blood cancer drug, Revlimid. But CEO Giovanni Caforio, I thought, told a compelling story when we spoke to him at the J.P. Morgan Healthcare Conference about the synergies, about the positives. We like what we heard. Since then, the stock's been able to erase those losses. Not bad, huh? Now, though, there's a new wrinkle. First, Wellington, an 8% shareholder, announced it doesn't support the transaction, calling it risky and expensive, suggests there are better ways to create shareholder value. Then earlier this week, an activist firm, Starboard Value, these guys are all over the place, took a position in Bristol and published a letter to management, arguing that the Celgene deal is poorly conceived and ill-advised. They want to get other shareholders to block the acquisition. They're even sending letters to you if you're a shareholder. So today, Bristol-Myers released an updated slide deck highlighting the virtues of the Celgene transaction. Starboard fired back at me with a letter. This thing's getting really intense and confusing. So let's take a closer look with Giovanni Caforio. He's the chairman and CEO of Bristol-Myers Squibb, and get an update on where the Celgene deal stands and why it makes sense for you if you're a shareholder. Giovanni, welcome to Mad Money. Good to see you, sir. Have a seat.
Thanks for having me.
Excellent. Now, this has gotten very difficult we have many, many viewers who own shares in Bristol-Myers. So first, before we go into a little bit deeper, again, just trace out the rationale about what this does for the bottom line for Bristol-Myers shareholders.
Well, Jim, I'm very excited about the deal. It's a great deal. The transaction is strategically very strong. It creates the #1 company in oncology, #1 cardiovascular franchise, very strong presence in autoimmune diseases. It generates value for shareholders from day one, and it provides a path to sustainable long-term growth for Bristol-Myers Squibb. Think we're going to be launching 6 new medicines in the first 24 months.
Now, I think it's important to point that out because all I hear from some of these unhappy shareholders is that, look, Celgene's just Revlimid. They never talk about the 5 late-stage products with near-term approvals that I don't think were in the stock, so to speak, given the price-earnings multiple.
Well, those 5 products are either best-in-class, first-in-class. We're going to be launching in the next 12 to 24 months. They are de-risked, 3 of them from a clinical perspective. So you know our industry very well, Jim. It's all about bringing new innovative medicines to patients. We have a great opportunity when we bring the 2 companies together to bring even more medicines to patients.
One of the things that has irritated me about the critics of this is I say, well, who would know more than Giovanni to be able to analyze this? You guys know how to do deals. You've also been through patent cliffs, and you've triumphed over them.
Yes, absolutely. So, first of all, when you look at our sales today, 60% of our sales at Bristol-Myers Squibb come from products that we've launched in the last 5 years. We've managed successfully the renewal of our portfolio before. And in our industry, as you know, we know when products end their life, we lose patent, and that's why you need an R&D engine that generates more innovation. That's what this deal is all about.
I know you talk to all your shareholders, and you're equal to all of them. An 8% shareholder, Wellington, is saying that there are better ways to create value for Bristol-Myers shareholders. Have they told you about better ways?
You know, Jim, we do talk to all shareholders, and they're important to us, and Wellington is as well. We disagree with them. I believe this is the best deal for us. We have looked at the acquisition of Celgene, and we are acquiring a number of promising molecules in the pipeline. As I said, we will be launching potentially 5 in the next 2 years, but there is more than 20 in phase 1 and phase 2 clinical trials. This is the best deal for Bristol-Myers Squibb. As a board, as a management team, we are behind it. We can't wait to get started because it's a great company.
Okay, Giovanni, I'm going to look you in the eyes and ask you a question. Were you approached by another company, and rather than become part of that company, you decided to stay independent and bought Celgene for a ton of money so that any potential acquirer would no longer pursue you?
Jim, let me be very clear. If there had been an acquirer, we would have disclosed it. This is not a defensive deal. This is a great deal because we are creating an even stronger Bristol-Myers Squibb, well-positioned for long-term growth.
All right, let's talk about the money. It does seem to me that the amount of money that Celgene is going to make versus what it was selling at you stole the company is the way I look at it. But that's okay, because we had Celgene on. They want to get together, too. What does is it accretive? Do the shareholders make money within, say, 18 months if this deal closes?
So first of all, it's accretive day one. From an EPS perspective, it's 10% accretive right away, and it creates a lot of value for shareholders. And the good thing is, the deal begins to generate value right away because we are going to be launching medicines from the very beginning.
Now, when you sit down with your scientists and you say, look, this Revlimid does have a real patent problem, does anyone say, you know what, there may be some things with Revlimid that won't make it so it goes to zero when it goes off patent?
I think that as every medicine, Revlimid will lose patent. We looked at it very carefully.
Right.
It was a big part of our due diligence. We became comfortable that under many scenarios, the deal generates value for shareholders of Bristol-Myers Squibb. But what really excited us and what excites me is the pipeline, because our industry is about new medicines to patients. We'll bring more new medicines to patients faster, and that's how you generate value in our industry in the long term. This will be a great company.
Okay, I know Bob Hugan, previous CEO for a long time, coaches a daughter in soccer in Summit. One of the things he always told me was, watch the farm teams, watch the companies that we're buying shares of, because if they're any good, we got a great call on them. Have you looked at that farm team?
We actually have, and one of the great strategies of Celgene was to create a network of alliances with biotech companies. We do that as well at Bristol-Myers Squibb, and that's another element where we're complementary as a company. And we will have an R&D organization that balances internal innovation, what we do very well with great scientists from both companies, but also an extremely promising network of alliances with biotech companies. And that's the power of combining those two companies. It's going to be all about science.
Okay, one last thing. You know, I was there when Bob bought Receptos, and a lot of people feel that turned out there wasn't anything there. Is there something, Receptos?
Well, one of the big part of the due diligence we did was on the Receptos product, ozanimod.
Right. And so I thought that was big. I might have been wrong.
And as you know, Celgene has said they're getting ready to refile that. Right. We believe that's an important part of the pipeline. It goes beyond ozanimod, but obviously that is an important part of our pipeline. So it's about new medicines to patients. This is a great company. It's a great transaction, and I am very excited about it.
Well, I'm very excited that you came here to explain it. And I want everyone to go, if you're a shareholder of Bristol-Myers or you're thinking about it, there is more to read about this. It's written in English. You will understand it. It is not written in scientist-ese. And I think you'll come to the conclusion that I did, that this is something that Bristol should do. That's Giovanni Caforio. He's the chairman and CEO of Bristol-Myers. Mad Money's back at you. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.